Welcome to this explainer. Today, we're bringing some serious energy to a massive, multi-trillion-dollar head-to-head matchup in the world of global finance. We're looking at the reigning champion of fixed income, conventional bonds, and comparing them directly with their rapidly growing ethical challenger, Sukuk.
I mean, it's a pretty wild thought, right? What if you could actually invest in a fixed income market, get those steady returns, but without charging a single cent of interest? Well, that is the core premise of Islamic finance. It strictly prohibits riba, or interest. And honestly, that single rule has birthed a completely different way to structure massive global financial deals.
Okay, let's dive right into this. We're going to break it all down into 6 parts today. The fixed income heavyweights, debt versus asset ownership, analyzing the risks, market trends, investment potential, and lastly, the future of finance.
Starting off with Section 1, the fixed income heavyweights.
So for literally centuries, conventional bonds have basically been the gold standard for governments and corporations to raise capital. But recently, Sukuk has emerged as the premier Sharia-compliant alternative. To really grasp this, we've got to look at the official definition from the Securities Commission Malaysia. They define Sukuk as certificates of equal value that evidence undivided ownership or investment in tangible assets or projects using Sharia principles. I want to highlight something absolutely crucial here. Sukuk is not just a Muslim bond or, a regular bond with an Arabic name slapped on it. No way. It is a fundamentally different financial instrument based on actual ownership rather than simply lending money.
That brings us to Section 2, debt versus asset ownership.
And this brilliantly illustrates that massive structural difference. With a conventional bond, it's entirely debt-based. You lend money to an issuer, you enter a creditor-debtor relationship, and they pay you a fixed interest rate, known as a coupon. Pretty standard. But look at the Sukuk side of things. It's asset-based or asset-backed. You hold beneficial ownership in an underlying asset. And your returns? They come from profit, rental income, or sale prices generated by that specific asset. So basically, one is an IOU, while the other is saying, hey, I own a piece of this real-world asset.
To make all of that happen without charging interest, Sukuk relies on some pretty brilliant Sharia principles. Let's demystify these for a second. We have ijara, which means leasing. Just imagine a company selling a building to Sukuk holders who then lease it right back to the company for rental income. Then there's mudaraba, where investors provide capital, the issuer manages the project, and they share the profits. Musharaka is a joint venture where both parties put in capital and share the business risk. And wakala bi enlisted mar, which is essentially an agency model where an appointed agent manages investments on your behalf. In every single one of these cases, your return is tied directly to real economic activities, not just speculative debt.
All right, Section 3, analyzing the risks.
Now, while both of these instruments do provide stable income, neither is completely immune to market realities, right? Breaking down this matrix, credit risk for a conventional bond is super simple. If the issuer goes bankrupt, they default on the debt. For Sukuk, the credit risk is actually tied to the performance risk of the underlying asset itself. Then we have market risk. Conventional bonds are famously sensitive to central bank interest rate hikes. Sukuk, interestingly enough, shows less extreme tail risk in stable economies, though the research does show they're still definitely vulnerable during massive global shocks, like what we saw with the COVID-19 pandemic. But it's this last one, liquidity risk, that we really need to pause on for a second.
So the crucial point to take away here is that Sukuk investors generally face higher liquidity risk. Why is that? Well, because Sharia-compliant options are still relatively limited in the grand scheme of global finance. Islamic banks and institutional investors buy these Sukuk and they hold on to them until maturity for compliance reasons. This really strong buy-and-hold mentality means there are fewer of them trading out there in the secondary market, and that makes them harder to buy or sell quickly when you compare them to highly liquid conventional bonds.
Let's move to Section 4, market trends and performance.
Because theory is great, but how are these actually performing out in the wild? Well, look no further than Malaysia. Malaysia operates a highly successful dual economy. And just look at the staggering data point for 2025. Sukuk issuances made up 66.51% of the total bonds and Sukuk issuances. That's hitting over 284 billion ringgit. That completely eclipses conventional bond issuances over there. It's a massive testament to the sheer investor trust in the Islamic capital market.
Now, what's really interesting about the global trajectory is that massive spike post-2020. When the COVID-19 pandemic hit, governments and corporations desperately needed alternative financing to recover. Sukuk stepped up and served as a highly resilient, transparent, asset-backed haven during that intense economic instability.
That momentum actually pushed global issuances to record highs of $146 billion by 2024.
Section 5. Investment potential and challenges.
So, if you're an investor or an issuer, what is the actual bottom line trade-off? This stat is honestly fascinating. Research from the primary market shows that Sukuk are often offered with return rates roughly 11 to 28 basis points lower than equivalent conventional bonds. You might be wondering, why on earth would investors accept a lower yield? Well, it all comes down to incredible demand and limited supply. Islamic investors have a restricted universe of Sharia-compliant assets they can legally buy, so issuers can actually raise funds more cheaply, and investors are totally happy to accept slightly lower yields in exchange for strict Sharia compliance, real asset backing, and historic market stability.
To kind of summarize the trade-offs here, the advantages of Sukuk are its high investor demand, strong asset backing, and the fact that its yield spreads are historically way less sensitive to equity market volatility. It's a really stable anchor for a portfolio. But the challenges are definitely real. That high demand versus low supply creates inefficient pricing. And because it has a lower global volume and a smaller secondary market than conventional bonds, it still faces some real hurdles to truly rival the flexibility and the sheer size of traditional debt markets on a global scale.
And finally, Section 6, the future of finance.
Technology and shifting global trends are rapidly evolving both of these capital markets, making the future outlook incredibly exciting. First off, we're seeing the rise of digitalization and blockchain. Tokenized digital Sukuk are making the issuance process faster and way cheaper, which opens the door for much smaller companies to raise funds. Second, we have the massive rise of green Sukuk. Global investors are heavily prioritizing ESG, environmental, social, and governance factors. Sukuk, because it's inherently tied to asset backing, is perfectly positioned to bridge the gap between traditional capital markets and sustainable green financing. And finally, there's a major global push to standardize Sharia rules across different countries. This is going to drastically reduce legal confusion and friction, which paves the way for truly borderless global Sukuk.
So it leaves us with this fascinating landscape where ancient ethical principles are meeting cutting-edge financial technology. Which brings me to a final question for you. How will the rise of ethical, asset-backed financing reshape your own portfolio in a world that is increasingly prioritizing sustainability and ESG? It's a lot to think about, whether you're a conventional fixed-income veteran or maybe you're exploring Islamic finance for the very first time. Thank you so much for learning with us today on this explainer. We'll see you next time.